right. Hello, everybody. Welcome back to another episode of the Market Close. First of all, just want to ask, do you guys notice anything different at all about my appearance by any stretch? Does anyone notice anything a little different? If you didn't notice anything different, well, Crowdstrike wasn't the only thing today that got a haircut. You know what I'm talking about? You can see my face again. Doesn't look too crazy. Got the hairline at the top. It's not so. We're doing okay. We're doing okay. $35 for a haircut. It is what it is. But we got a lot to talk about, folks. So at 4:15, I will have my good friend Shay that I talked about this morning. He's going to be joining the Market Close. I asked him this morning if he could join, and he has Crowdstrike as his number one position, actually. So I'm actually very excited to talk to him at 4:15. This is his holdings right here. Crowdstrike is the number one position in his portfolio. 15% of the portfolio. Average cost base is $129. So it'll be interesting to talk to him, get his thoughts on what's going on. He also recently met with Iliano. You guys know Iliano. Iliano, he's one of the main people at Palantir with their government strategic affairs. And so I want to ask him some questions on how he thinks about Palantir now that he met with some people at the company. So all in all, in about 30 minutes, we'll go more in depth into what's happening with Crowdstrike. I've done a little bit more due diligence since the beginning of the day, and I have some evolving thoughts on the company and the situation that's happening right now. So we'll dive deep into that in about 30 minutes. Outside of Crowdstrike, the macro is very interesting right now for two reasons. Number one, it seems like it is indeed possible to have two girlfriends at once. The girlfriends I'm talking about are IWM, Russell up 1.67% at 220. And also, you can have a little side action with Nvidia at 123. Nvidia's up basically 5%. IWM is up 1.6%, which IWM, given its index, is different from Nvidia as an individual stock. That's a very big move for IWM, going up almost 2%. And Nvidia going back from, coming up from the lows at 116, where it was at last week. So it seems like the dip on large cap tech, if we look at the Max 7, really is not existing today. Tesla even pushing 251. We'll talk about them going into earnings tomorrow. Amazon's up, Nvidia, Google, Meta, Microsoft, Apple. But what makes this really exciting is that small caps are also sharing in the love, and they are not going inverse to large cap tech, which is really nice to see. Dougie Fresh says 2 boyfriends in your case. Okay. Anyway, so nice to see IWM having some momentum right here. Palantir basically flat for the day. Nice big green candle into the close, 28.54. SoFi, 7.53. Robinhood, apparently a bunch of people are tweeting about the Robinhood credit card, and I just checked the App Store. It's number 84 in the finance App Store in the United States. So I imagine they're rolling out that credit card pretty heavily right now. As we get into the end of July. 23.38 on Robinhood. Bitcoin, some really interesting stuff about Bitcoin. So Bitcoin right now pumping at 68,000. Apparently Elon Musk is in Nashville right now. He's currently live on an interview with Jordan Peterson, which we'll probably check out some highlights of that later. Elon Musk is in Nashville with Jordan Peterson. In Nashville, we are having the Bitcoin conference in a couple of days. Is it crazy to say Elon makes a guest appearance and he speaks at Nashville and he speaks at the Bitcoin conference? Maybe Tesla ended up buying some Bitcoin. I mean, like, there's a lot of kind of theories going around right now, but will be interesting to see potentially Elon. We know he's in Nashville as for his private jet locator. And so as a result of that, maybe there's an argument that he shows up at the conference. We know Trump will be at the conference. We know some of the other big names like Cathie Wood will be at the conference, but we'll see if Elon ends up making a appearance. Okay, so let's talk about I think some of you guys might have missed this clip this morning. Let's listen again to his prediction, because while I was listening to it this morning, I actually didn't realize he did say IWM should be up 40% by the end of the summer. We've got 2 months left of summer, which means he's calling for a $300 price target on small caps. Let's see his argument, and then we'll keep going from there. And for those that are just joining, at about 4:15, I'm going to have someone who is an early investor in Crowdstrike join the channel, and we'll discuss all things Crowdstrike as well.
Say that this Friday's inflation data will likely shift the odds higher of a July and September rate cut, supporting the summer of small caps, as he said. Joining us here at Post 9 is Tom Lee, Fundstrat Global Advisors, Head of Research, and a CNBC contributor. Tom, it's great to have you.
Great to see you.
You want to start with what the political news or the economic news? What's more important to you, do you think?
In the short term, it's the political news. But really, in the longer term, especially into year end, it's actually the economic news.
Explain why.
Well, in the short term, markets are very sensitive to, especially the sector level, depending on whether it's a Republican or Democratic taking the White House in November, and then especially all the congressional elections and state elections. So I think that's what you saw last week is as probably shifted towards Trump, small caps, industrials, financials rallied.
And you're sticking with that call, which is for what, 40% over 10 weeks?
Yeah, the overlap is small caps are very sensitive to a Fed cut. And really the probability of a Fed cut, that it's finally happening. And I think it's going to look like the October to December 2023 rally, which was almost 30%. This one should be bigger because of the amount of short positioning and the amount of oversold in the Russell. So yeah, 40% by the end of the summer.
So that's his argument. 40% end of the summer. That would put IWM closer to $300. Bitcoin right here, 68,245. Now, KRE is having a phenomenal day as well. The regional banking index, TFC, one of the big winners in that. That's up 2%. KRE is, I think, 30% of the IWM. So the regionals leading, that will be good for small caps. Here's the question. Here's an interesting question. By the way, Crowdstrike, we'll talk about that in a second. Crowdstrike right here at 263. Crowdstrike tried to make some momentum up to 268, and then it just got hammered back down at 263. And I'm going to bring up a couple of pieces of news for why that might be the case. Would you rather buy Crowdstrike at 264 down from 380, or would you buy IWM at 220 and trust that Tom Lee's thesis is correct and we see 300 by the end of the year? It's an interesting question. I think the far majority of people would actually be rolling with Tom Lee just because of the massive uncertainty that exists with Crowdstrike. Also, the fact that it is still a bit pricey, even after it's down 30% in a couple days. But the question with IWM, you got to pick your poison here, is you're really not buying anything special other than unprofitable growth companies that need rates to come down to help them. But the very nature of rates coming down obviously will be a massive tailwind for small caps. We got some people saying Crowdstrike, some people saying IWM, some people 50-50, Crowdstrike. Yes, I think a lot of people are kind of on the edge of either. But it is an interesting question. If you had to deploy capital against one of those, obviously if you're long-term, I feel like Crowdstrike's, if you have like a 5-year view, Crowdstrike's easier. But if you're looking for the next 6 months, maybe IWM is the better hit. Now, a couple of things, given we're talking about how the market's performing. Here's a stat on the companies that reported earnings. So we talked about this morning, and we have some concrete numbers on this now. So 71 companies in the S&P 500 have reported so far on their earnings. 51 have beat on EPS, 42 beat on revenue, 36 beat on EPS and revenue. So you got basically half of the companies in the S&P 500 that have reported so far that have beat on EPS and revenue. Financials have led the way. We've seen financials do a really good job with Goldman Sachs, JP Morgan, Bank of America, TFC. By the way, Warren Buffett sold 40 million shares of Bank of America today. He still owns about 999 million, but he did sell a decent amount today. So it's not a horrible start to earnings season so far. The reason this is important for small caps is because if these companies, financials, and some of the other bigger names just weren't doing that well, it would be very hard to imagine small caps can put up the numbers that are necessary for the market to at least even look at them, even if they were to get the macro tailwind, which is the rate cut. So the fact that earnings have started to go well, not every stock has reflected how good the earnings have been for their individual companies. A lot of them because they were just up a lot year to date, and so they had like really high expectations, but the actual numbers weren't that bad. And that's why I think we're seeing some momentum here on IWM as well. Okay, let's talk a little bit about Crowdstrike, and then we'll get into the market close. So a couple of pieces of due diligence I found today that are relatively bearish. Number one, Delta is still stuck. Delta's down 3.5% today. Here's a chart that will really make you happy that you're not in a Delta flight today. This is a Delta specific problem, although it is caused by Crowdstrike. Delta has pretty much all of their, or about 36%, if I can get the exact number. Okay, I don't think I have it saved here. I'll pull up the chart in a second, but about 36% of their flights are still delayed. And another 40% of them got canceled. So Delta uniquely is struggling because of Crowdstrike. Here's a video right here kind of showing the extent of the damage. Delta's completely dropped the ball on this. My family and I have been stranded at Atlanta for 4 days now. 0 car rentals, 0 hotels, 4 to 5 hours in line to even talk to a person, thousands of flights canceled. United and Southwest are not having this issue. Uniquely Delta is, which means it is Crowdstrike's fault, but part of it also could just be Delta has not had the best management of the situation. Here's a line just to get to access TSA. it is pretty bad right now for some of the airlines or for some of the airports that are heavily that have Delta as a heavy majority of the traffic in those airlines. So as a result of that, not only is Delta down, but that speaks to the broader trend that this CrowdStrike issue was pretty damn bad. I mean, it was just not good at all. CrowdStrike tried to recover a little bit at 268, but then it got a couple of downgrades from Oppenheimer. And then another one, we saw the Piper Sandler one today, but a couple other ones here. Let me show you guys this one. This one was actually hilarious, but it was also bad. Let me see if I have it right here. Okay, weird. It's not showing up. But Guggenheim and Oppenheimer decreased it, downgraded. And then one of the firms, I'm forgetting the name of the firm, but they put out a note saying, hey, on Friday, we were going to put out a note saying, buy the dip. It's not that big of a deal. But ironically, we couldn't put out that note because of CrowdStrike. Like there was IT infrastructure issues at our bank, so we couldn't issue the note. Therefore, we're now downgrading CrowdStrike because we have severely sort of underestimated how bad the extent of the damage is. So when Shay comes on, we'll get his thoughts and his opinions on what's going on right now. But at its core, it's pretty bad. And if it's pretty bad, as RG says here, the claim of the damages are going to be a broad extent or going to play a broad extent in terms of how much money CrowdStrike's going to have to pay. Yes, they have cash. Yes, they're going to be able to deal with those legal fees. And yes, insurance is going to cover some of that. But if this does damper the ability for them to renew their licenses with the majority of clients they have, they're already in 62 of the Fortune 100. A lot of those companies that got affected by this have a big bargaining chip, which is, hey, we're just going to leave. Now, it's not easy to leave. And as contrary to what people think that it's just easy to leave, there is a lot of infrastructure needs and pricing issues with just switching to another provider of cybersecurity, but they can threaten to leave, and that would ultimately hurt CrowdStrike. So we'll talk more about it with Shay, but that is some of the issues that it's having today. It's holding up okay in the 260s, but as of now, the selling definitely probably was warranted today, just given some of the global IT outages that haven't been resolved. S&P at 554, PayPal up 2%, SoFi 754. SoFi was at 746 for the day, so that one is doing nice. Match Group is still down. Starbucks still down about 4%. Google 181. TNA getting some momentum. This is triple leverage on IWM. It seems like after Tom Lee came on CNBC, more people started getting excited about IWM. Nothing really fundamental happened. We didn't get any inflation news. On Friday, we get core PCE. If that inflation news is good, then you could expect small caps to potentially benefit even more. But I think the really exciting thing is in 30 seconds when the market closes, Nvidia will close up 5% and IWM will close up 1.6%. Both of them have not closed green, like I think all this entire year. On Monday, they were both green for like 15 minutes. And then I think Nvidia further went up and then small caps, IWM went down. So both closing green is nice to see for the broader market. Just going to be a question now of how far can IWM ultimately go. All right, here we go. Monday, July 22nd, 4 p.m. Thank you, everybody, for being here. The stock market is now closed. All right, here we go. Let's see what we got. IWM closes up 1.5%. Bitcoin, nice little pump right here, 68,298. MicroStrategy is, wow, 1800. Look at that. If you've got MicroStrategy, you are feeling pretty happy today. MicroStrategy outperforming the broader market, obviously because Bitcoin is doing well. Robinhood 2342 on the day. Palantir 2844. Basically a flat day for Palantir. Nothing too crazy to the upside or the downside. S&P up from 547 to 554. 1% on the day. It ends a 3-day losing streak. The S&P had the worst 3-day streak that it had since April on Friday when it concluded the week last week. Right now back into action, up 1% on the day. Celsius also, we figured out why Celsius took a dump. Celsius got downgraded, down 2.9%. At one point, it was closer to 45. It got downgraded by a company. I feel like my bookmarks didn't save the ones that I saved correctly for this, but it got downgraded. The reason it got downgraded is because Celsius saw a 22% volume increase with a 2.4% average price rise for the 4 weeks ending June 29th. That is down from 41% volume gain over the past 12 weeks. And so although the volume is increasing, it's not increasing at the rate at which analysts want it to increase, which is why it got the downgrade today. I'll try to find the firm that downgraded, but the point is it did get a downgrade. And so that's why Celsius is taking a little bit of a hit. Interesting. Sports Guy says Celsius will be up 10% tomorrow after Coke crushes their earnings. I have no opinion on Coke going into earnings. Not sure if they would do good or bad. I don't really know what the catalyst is for Coke, but that's interesting that maybe there's a correlation there. If Coke does well, that Celsius can do well. And Celsius uniquely is struggling with the perceived sales volume decline week over week, not even year over year. So if that's the case, that might create some more strain on the stock. I did ask on Twitter who was buying, and I got a decent amount of people saying they were taking like at least nibbling into Celsius, but right now here it's at 48.14. Let's see how the Mag 7 ended on the day. We have Google up 2%, Meta up 2%, Microsoft up 1.3%, Amazon down for some reason. Not sure why Amazon's down. They got upgraded to 220 today as well. But Amazon went down. Okay, so Amazon's one of the only ones that went down. Nvidia up 4.76 up in the after hours. And then Tesla here at 251. Tesla's an interesting one, dude. Tesla got up to 251 today. Of course, we're going to have earnings tomorrow. I'll be live at probably 3:30. I'll have a couple guests with me on the show. But Tesla's going to be exciting because Elon did say, hey, Optimus is going to get ready to come. Earnings projections, we already know what they tend to be. Energy might surprise. I mean, if Tesla has a run, maybe we have a run back into that $300 range, or at least in that 270 range. But it has run up 84% from the lows. And the question is just going to be, does the market still have any juice left to give Tesla? Palantir right here, 28.44. Snowflake on the day as well, up a little bit, 131.12. If we look at the semis today, they had a decent day. Outside of SMCI, which I think got downgraded as well, this was one of the only names that was red. ASML, Qualcomm, TSM, Nvidia, AMD, even if they weren't up a lot, they were up today. And then Dell, Lam Research, ARM, all of those were green as well on the day. Amazon stock is performing horribly. Management has to start caring about shareholders more and initiate a dividend or at least some buybacks. Okay, so I understand the sentiment if you just bought in, but Amazon stock year to date is up 21%. So I don't necessarily know if the reason that it's down is because of management being incompetent. I think it's because, well, one of the people in management is continues to buy like private islands, Jeff Bezos. So that's a little bit of a strain on the stock. But also, remember, with Amazon, it's all about margins. If they show operating margins are up from where they were last quarter at 10%, which is the highest since 2021, I think we'll see multiple expansion. If not, then we're going to have some problems when it comes to Amazon. All right, cool. So let's get started with our special guest who is joining me for the first time ever on the market close. We're going to talk in depth about Crowdstrike. This is one of the largest positions that he has in his portfolio. He's been an early investor. And any questions in the chat around Crowdstrike, please put them in the chat, and we'll try to get his perspective on what's going on. Shay, what's up?
What's up? What's up? There's something happening at Crowdstrike in the past week?
just a little bit of market cap shaved off, just a little bit of airplanes couldn't get in the sky,
I mean, luckily for me, I'm a Snowflake investor, so Snowflake prepared me for this kind of debacle on Crowdstrike. Yeah, I mean, it's freaking nuts. It's crazy. Crowdstrike is the perfect example. Everyone universally, their mothers and fathers agreed that Crowdstrike was like one of these like best of breed growth companies. It was going to be the first small mid-cap growth company to hit a meta-cap status. Everyone agreed on that. Then all of a sudden this hit news flow, and all of a sudden narrative is driving the price action. And now I see people saying Crowdstrike is going to go to zero. They're just going to have to pay billions of dollars, and they're only worth 60 bills, so they're going to have to file bankruptcy. I'm like, it's just wild to me. It's for me to even think that. But again, that's just how the market goes. It's psychology behind it. That's why you and I love it because of that. So
yeah, so we got a lot to talk about. First of all, guys, Shay's Twitter is in the chat. Please make sure to follow him there. Shay is a really awesome investor. I love listening to his tweets and just watching what he has to say. Here's his portfolio. Shay, before we get started on Crowdstrike, who are you? Because this is your first introduction to my channel. This was long overdue, but we got it done under unfortunate circumstances. And why do you care about the markets? Why do you create content about it? What's your angle?
Yeah, absolutely. So my name's Shay. I live out in LA, 30 years old. So I started this only a year ago, mainly because my girlfriend at the time, fiance now, was sick of me talking about stocks. So I might as well just start a Twitter page. I followed FinTwit from the get-go in 2020. So I was like, all right, I'll start it. And then it started blowing up. So what do I do? I call this my Batman job. So what's my Bruce Wayne job? I'm a director at United Healthcare. So I'm not allowed to really speak on any healthcare related topics, obviously, because it's like massive company.
Right.
But luckily, I have a team of 20 people underneath me, so I get to do a lot of like the fun leadership. The way my job works is I communicate to C-suite all the time, CFO specifically, on what's happening in our healthcare landscape in California, etc. So my experience has always been digesting a ton of data, creating a narrative that's digestible for C-suite. So that's naturally, there's synergy on FinTwit for the same information, where cybersecurity, there's 20 plus names out there, a ton of replicated products. How do you dig through the noise and actually figure out what has a moat, what's a fake, what's a winner? And my experience in the past has led me to this point where I can like easily digest material and communicate it. So I worked at iBaking out of college, then I went to Snapchat, shit show. I left after 2 months. Evan's not the best boss.
I was looking at their stock today and I was like, oh man, this company just sucks no matter how cheap.
I also worked in Lionsgate, so I have entertainment experience as well. So I've got tech, entertainment, healthcare, all in corporate strategy. So all I did in my whole career is communicate to C-suite about, again, a narrative of what's happening in their company. And I'm just translating them right now on my Twitter page.
Okay, so let's get started with this. You started buying Crowdstrike at or your average cost was at 130. I actually didn't know it's the number one position in your portfolio. That might not be the case anymore, given it fell a little bit.
It's not the case, which is kind of wild.
Yeah, it's a good nasty dip. So let's start off with this. Let's go high level and really get in depth and get into the nitty gritty. And again, guys, if any questions, put in the chat. What does Crowdstrike do, and why did you buy Crowdstrike over the Fortinets and Palo Altos of the world a couple years ago when you started buying?
Yeah, so Crowdstrike, if you guys don't know, it's a cybersecurity player. Everyone knows them as just what's the better word? Just an endpoint security company. So just think about it. If you're at a nightclub, it's a great analogy. I don't know where I took this from, but let's just say there's a nightclub and there's multiple security components of a nightclub. There's a bouncer, there's like security cameras, there's like the security guard over the table, bottle service. Like there's multiple different components of security for one nightclub. So Crowdstrike specifically for the endpoint feature of cybersecurity, they're the bouncer. So they examine everything that comes into the nightclub, head to toes, make sure you're okay to come through. So the middle part, which is like the examining all like the security cameras, making sure everyone's like acting right, that's Zscaler. Zscaler and Crowdstrike have a great peanut butter and jelly relationship where they kind of have this like agreement between the CEOs, like we won't eat your lunch, don't eat our lunch. Just become best friends and build a relationship from there. That's exactly what it's been like for years for them. So now they're not going to like ruin that relationship in order to like make a couple extra bucks, because easily like Crowdstrike could do what Zscaler does. They just don't, and they want to ruin that relationship. So that's what Crowdstrike does. However, they're not just an endpoint security company anymore. They have so many different modules. They have, let me pull it up right now so I don't miss out on any. I mean, the main ones, they do cloud security, which is the Wiz competitor.
Yeah, we'll talk about Wiz in a bit because that's interesting as well.
Yeah, the Wiz competitor, Sentinel-1 competitor. They also do identity security. They also do log management. Like there's a list of 8 to 9 modules, and this list used to only be essentially endpoints. And then over the past 5 years since their IPO, they've just consistently cross-sold additional new products into their platform. And because of that insane growth they've experienced in each module, like I'm telling you, like a perfect example, I put in my notes right here. The most recent earnings, cloud security for alone, which is like a newer module for them, it crossed 500 million ARR, and that grew 100% year over year. Wow. Identity security crossed 400 million ARR, that grew 100% year over year. Log management grew to close to 200 million, and that grew close to 200% year over year. So like the cross-selling opportunity is insane for Crowdstrike, and it's because their endpoint security is the best.
Meaning they get you with endpoint, and then they say, "Hey, do you want cloud? Do you want identity?" And they keep going from there.
Exactly. That's why I won't get into Palantir, but like Palantir's Foundry, like who knows what new growth avenues they can do on top of Foundry down the line. But like, essentially, if you have the perfect product, you can easily cross-sell and have an ecosystem around it. And unfortunately, like I work with CTOs and CIOs all the time. They're kind of lazy. Like if they see one product incredible, they assume the rest of the modules that they sell is also going to be up to par. So like they don't really want to have multiple different vendors, deal with the headaches of different sales teams, different management. They want to consolidate. So that's why a lot of customers just adopt new modules for Crowdstrike because they know that their Falcon is the best. That's the reason I'm a little worried right now on this. I'll get into what happened, but like my thesis when I first started was like, all right, well, I see this module adoption. I think this could be the go-to all-in-one cybersecurity platform across all enterprises. That got removed instantly last week. That's not going to happen anymore.
Right.
But that's exactly why I got in like early. My average cost base is at 130, and it grew up to a 15% position for me without me even touching it.
Okay, so let's then talk about what the hell happened. I think all of us have a sort of bird's eye understanding of what happened. You can give us some of the nitty gritty if you do know that, but more so, I think we care about the implications of this on their brand, reputation, and quite frankly, if people are just going to pull an Elon and just get rid of it off their company.
Yeah, so I'm a fanboy of Elon. I think Elon lied. He didn't lie. He maybe misspoke, and it didn't actually happen because they would be highly vulnerable for hacking if that did happen, because you can't just take it out. Like, you have essentially no cybersecurity protection. Like, if you like, it doesn't make sense. So I think he just maybe not misspoke, but it didn't really happen like right away. But maybe down the line it might happen. But essentially, what happened was, it's really important that this isn't a breach. Like, it wasn't just one of the products that got hacked. It was just a glitch related to a product launch. Like, it's essentially a stupidity. That's what caused it. And a great example of, I'm trying to make an analogy of it, because a lot of people don't know what definition files are, like the nitty and gritty. So let's just say Amita and I are in a sports team right now, and we're responsible for keeping our computer system safe, kind of like how an antivirus system works, software system works. So they use something called a definition file, which is what was the issue on this update, which are the basic rules and data to help identify and block bad software, like malware, for messing up with your computer. So this part of the definition file in the update was slightly corrupted. It was a C disruption. If you are a developer, you know how it's like missing a layup in a basketball game. It's so easy, but you have to kind of pay attention just enough where you don't miss it. This exactly was the same thing. So like Game 7, NBA Finals, you're going for a game-winning layup. You just missed it because your eyes were towards like celebrating with your team or whatnot. And that's what happened. Your team lost. That's exactly what happened. And like the 10,000 foot view of it. But the implication of this is massive. Nothing about the product was diminished. There's nothing about like, they still have a tier 1 highest quality product. However, their QA, the quality assurance, was just not there. Why was that not there? I can't answer for you because I'm not in that boardroom, but maybe endpoint security is kind of competitive. So if SentinelOne was go to market way quicker on like all their product updates, etc., like maybe they just felt the urgency to make sure they boom, 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 without having certain things in place in order.
But a question there: they pushed an update on a Friday, which historically you're not supposed to do.
Yeah, I don't even know why they would do that. It's like that's why it's something's weird about it.
Yeah, and then it didn't even go to like a test; it just went straight to prod, and like that's not supposed to happen. So
yeah.
You don't blame people for being a bit skeptical that this is not the full story.
No, I think there might have been some slippage internally on, again, the quality assurance. However, I think it's catch-22 that this was a self-infliction wound that's going to probably require a ton of different corporate strategies on gaining the trust of all their customers. Like, I also want to go back a couple of steps. Like, this isn't the first major outage that's happened to a single company.
Correct.
There's Cloudflare a couple of years ago. There's Okta. There's Microsoft, Amazon. Like, this all happens for these high growth, medium-sized companies. The biggest reason this was like such an impact is valuation. Right. Crowdstrike was always a high valuation, well-deserved as a premium, only tier 1 cybersecurity name. That has this black eye, which it's all over Fintway. Everyone calls it a black eye. It's removed. Does not deserve a premium valuation anymore. It has to be in line with Palo Alto, which is the original blue chip cybersecurity company. And that valuation compression has occurred. Right now at 260, Crowstrike is actually cheaper than Palo Alto is right now. And now that tier 1 premium valuation is gone. So the argument of like, oh, it's a high valuation, it needs to compress, it already happened. The biggest thing to talk about now is reputation. Right. Because early on this call, I just mentioned where the cross-selling component of Crowdstrike was wild in the past couple of years. Like multiple different modules, over 100 plus million RRs, growing triple digits. Now, they're not going to trust the word of Crowdstrike. Go, oh, like you're incredible at this endpoint. We're going to trust you blindly for these other adoption and cross-selling opportunities. So that was like, okay, my thesis originally when I got on 130 is slightly fading that they're going to be the go-to cybersecurity platform. Now, I think if you're a CIO, CTO, you're going to ask yourself, you can't solely rely on one cybersecurity company anymore. Like you need different options. You need Palo Alto, you need SentinelOne, you need Crowdstrike. You can't just all rely on one company. And that's why I was like, all right, it's going to get re-rated because that I was pricing that tier one all-in-one platform. I'm sure other people are re-rating. Like it's not going to be the case anymore. It's still the best in my opinion, but not the clear tier one. So
now when it got that premium valuation, was that because the growth is that much better or the product is that much better?
The product. Their Falcon is the best. And because their Falcon, which is the endpoint, is the best, they didn't really have to market it that much because, like, look, proof of concept. There's nothing better than us on this. Just trust our word for the other modules.
Right.
Like that's essentially how it went. I know I saw some stuff that McAfee had a massive breach back in the day, and where did the CEO from Crowdstrike come from? McAfee.
Well, that's another thing that's concerning. The CTO of McAfee in 2010, when they had the massive breach, which literally shut down 90% of the internet at that time, is the CEO of Crowdstrike, and I think he's a founder, CEO of Rockstar. However, it's kind of like a little bit of a trend in terms of the engineering culture that maybe he instilled that's creating this. And also, McAfee fucked up so badly they had to sell to Intel.
I know, because
they couldn't recover. So what is the argument there? Why does Crowdstrike not have to sell to like Google because of this?
I mean, first off, also half glass full. I know a lot of OG software salesmen like who started pre-cloud. Like I referenced, they're my mentors. I talk to them all the time. They had no idea the wide range of exposure that Crowdstrike had in the world. They were kind of shocked. They thought, okay, Palo Alto is a king. This is a hot new kid of Crowdstrike trying to like come into the table. They had no idea they were there already. So like they didn't realize the vast reach that Crowdstrike had already on their product. And the reason it won't get acquired is because this is still the best product in the market. They just had quality assurance issues because George, I love him. He's one of those disruptive founder-led CEOs that speaks his mind. Like you guys love Carp. I love Carp as well. Like on the conference calls, like George is not worried about bashing his competitors if they fuck up.
Yeah, I just listened to a podcast of George and he said, I don't give a fuck about billings. I don't know why people care about that metric. I only care about ARR. I was like, wow.
That's what I'm saying. Like you respect that. And you kind of love it. There's a fanship about it. And because of that, this disruptive nature of his like DNA of being a founder-led CEO, entrepreneur, etc., he probably missed a little admin stuff that he needed.
Right.
And that's the big issue on why they probably missed this little thing of like, why did you prevent this from the software update happening? Like this is such an easy layup. All he cares about is 3-pointers probably. So that's like, okay, that's annoying. And that he won't sell out because of this one it's a glitch in my opinion. It's not a mistake. However, they are on an absolute tightrope going forward. Like if they mess up again on something else, that's drastic. Do
you think there's a world where the board takes him off as CEO?
No, not at all. Not at all.
Why?
Because at the end of the day, like this wasn't his go-to-market is still product oriented and he like, is a founder led. So like he didn't do anything that malicious. It was just an over nobody was in place that needed to be in place to prevent this from happening. And that feels very COO, CTO, not CEO. Like he has bigger fish. He's trying to expand to new growth. His module. He's trying to expand like what was the one I referenced? Oh, log management's the highest grossing one. Like cloud security is just catching a bid from Wiz and Google. Like you're seeing, he's focused on these like big fish, these little rocks. Isn't really up his lane. Like I could see maybe some C-suite disruption on COO or someone in charge of that team. Like clearly, but he's safe. I think again, like he is the most respected cybersecurity CEO in the market right now. And he's founder led. Like you don't oust him because of a software update. Like it's not a breach.
Okay. So let's get into valuation. I want to go deep on this. So Crowdstrike now, you had a great tweet this morning that Wiz is currently trading or it would be sold for if they get acquired at 60x ARR, which is a decent amount. And Crowdstrike currently is selling after it's probably even lower than this right now, 17x ARR with a rule of 40 score of 62. So there's a lot of nuance here, but what is your response to not even just bears, but people who think Crowdstrike is still frothy? 30% drawdown is not enough. The extent of the damage means that there should be even more multiple compression, and that cybersecurity is important, but it's easy as well to switch from one vendor to another. Therefore, there's no moat, and that means the valuation should take a deeper nosedive.
Well, it's just like taking Palantir software out of an organization. It is a headache, like, and it takes time. So like, again, like they have, I forgot what percentage of the Fortune 2000 customers, like there's a significant amount that use Crowdstrike, right? So like, I think worst case scenario, they're going to have to probably offer some, I don't know, they're going to probably have to offer some credits for obviously the future customers. They're probably going to have to offer some refunds for the ones that got affected. Their reputation's obviously suffering, so that's going to impact their sales. And again, the credits to affected customers, that's going to be a big dip on revenue or ARR. Like, I don't know how much, but it's going to be. And it also showed like, maybe it showed an endpoint issue. Like maybe this isn't just a specific Crowdstrike issue where right now, like for a simple update and endpoint, it disrupted the whole global IT outage. Maybe you have to kind of rethink about how to structure endpoints going forward. Like maybe it's just it affects too many different arenas for how little it took to do that. That's maybe a bigger conversation. Valuation, you said, I mean, Wiz 60 times ARR, that's a nosebleed valuation. But guess what? Mandiant, which got acquired a couple years ago by Google, that was 65 times. So like their range is 60 to 65 times ARR. That feels like the sweet spot for these young, highly disruptive growth companies.
Why is Google paying so much? Like, do they
want to beef up their Google security products in order to compete with Microsoft? And this could be their Trojan horse to get into the enterprise space. So Microsoft owns enterprise. They're the enterprise king. Google, it's there, but only via the cloud, not much else. This could be their Trojan horse to finally like, all right, use our GCP, Google Cloud provide, like that's what it's called. We have a security profile now combining Mandiant with Wiz. That's really intriguing. Now we're becoming an actual big boy at the table with the Microsofts, and who knows what else they can like synergize going forward. So I think this is like their way of entering the enterprise space, because right now it's more consumer facing. Gmail, there's definitely like a first mover advantage on Google search regarding the data. I can make the argument that's more consumer as well. There's not much enterprise compared to Amazon and Microsoft. So this is their way of getting in. And also, they can afford to overpay because guess what? They have a ton of cash. What are they going to do with that cash? What, get 5% a year on interest rates? Fine. But acquiring a highly disruptive company like Wiz, this early innings of their growth, like I forgot when they got started. It was like within the past 5 years, I think. So it's just beginning their product and it's like gaining a lot of steam. So to scoop up a high quality asset like that this early is a no-brainer in my opinion. Price tag, whatever, like people will forget about that. But valuation for Crowdstrike, how does that affect Crowdstrike? Like I mentioned earlier on the call, like I forgot what the ARR was for Wiz, but it's just say
I think it's 450 million.
450. It's essentially exactly what's that's actually kind of wild. It's exactly what Crowdstrike's cloud security is at 500.
Right.
So all right. So right now, Crowdstrike 560 times ARR was equal $30 billion. And right now, cloud security is only 15% of Crowdstrike's total revenue. So if you just use that $30 billion valuation on 15% of Crowdstrike's total company, right now, where do they close at?
I think 60 billion roundabout.
That's a discount. That's a massive discount. So I know like Crowdstrike won't be selling just their cloud security component because they have this whole cross-selling component to their ecosystem. But it's a good way of benchmarking, like what's a good valuation on Crowstrike? Like, let's just say things get worse. Who is going to acquire them? It's going to be an insane amount of money for this high quality product. And I do think putting a price tag on cloud security for cybersecurity is going to bump up a lot of these names. Like SentinelOne, for example, they're trading at 10 times their ARR. I just told you Wiz is going to get acquired for 60 times ARR. So like that shows they're not similar growth rates, but one's way undervalued in SentinelOne. So I think that's going to catch a bid. And also,
and one thing here, Google. Some people might be thinking, well, you can't just use Google's acquisition as the barometer on valuations, and I think that's a fair argument. But if Google didn't acquire Wiz, either they go public and the market values them, or someone puts up a bid for Wiz, and so whatever the market ultimately pays for them, there has to be some type of downstream effect on how other cybersecurity names are valued.
Well, I just said Mandiant, who got acquired a couple years ago, that was 65 times ARR. So like, there is a range on, yes, you're right. Like that's maybe it's bidding up 60x, but like, fine, let's just do a 50 to 70 times ARR. That's like the wide range. So I think the reason they haven't gone public, for example, is SentinelOne. I just called out. They're trading at 10 times their ARR. So if they went public, they'd 100% experience a down round, essentially, because they just got way more in the private markets. What's going to incentivize them to go to the public markets? Yes, they're going to get a ton of cash from that IPO, but it's going to go down due to a down round from market valuation comps.
Right.
And Crowdstrike right now, my favorite I'm a growth investor. I have a public, like Amit just showed it in the beginning of the call, public growth portfolio. My favorite metric is Rule of 40 score. There's two companies who are unicorn status. It's Palantir and Crowdstrike. So Crowdstrike, nothing has changed about their fundamentals at all yet. So they both have a 60 plus score in the Rule of 40, Crowdstrike and Palantir. So Crowdstrike, let's just say, fine. They go from, what's their estimates right now? I can pull it up my model. They're growing 30% this year. Let's just say that goes down to 25%. Well, the market just corrected the Crowdstrike a 30% discount in a week. So I think you have to ask yourself, what's priced in at this point? This is not a dead company. This is just a valuation compression. Nothing about the product is changed. It's just stupidity. That's the only reason that caused the update, and it's bad PR. It's going to take probably 6 months to get over. But at the end of the day, there's news cycles going to shit this one out, and there's going to be a new one, like the election in 4 months. And when that happens, people are, they had a breach last year, but they're going to look at the fundamentals. Their fundamentals is they have 35% free cash flow margins while growing the top line 30%. If that dips to 25% their first year due to offering credits, refunds to affected customers, I still think the thematic of cybersecurity is here to stay. Data is going to absolutely explode due to AI. What do you have to do with that data? You have to protect it. So that's why cybersecurity is the stickiest component of every IT budget. If you're a CTO, you're not going to save a couple of dollars by buying a inferior products. You're going to go for the best. And at the end of the day, Crowdstrike still is the best product that had really bad processes. That's what happened. It really is. It's just like,
and you like Rule of 40 the most because as a SaaS company, which cybersecurity is a pure SaaS, that is the barometer on how excellent their execution is, essentially.
So it's not nearly impossible, but like I've worked across multiple different industries in corporate strategy. It's very hard to produce cash while growing the top line a certain percentage.
Right.
It's honestly unheard of to have 30% free cash flow margins while growing the top line 25% plus. Like it's so difficult. One has to give. It's a balance thing. So that's why Rule 40, like especially in this dry capital markets we experienced the past year or two, if you have the luxury of producing cash every year while still growing your top line 25%, that's optimizing free cash flow. Like you're just printing cash at a certain point, and you're going to be able to cannibalize your smaller players in your specific niche while still maintaining that top line growth. So once you can prove a Rule 40 score of 40 plus, essentially you prove that you have a moat, because it doesn't matter if you have this capitalistic society we're in. Capitalism is brutal. That competition will try to eat your lunch constantly. But if you don't let your free cash flow margins dwindle down while trying to focus on SG&A costs, sales and marketing to bump up your top line, if you can do both at the same time, that's a competitive moat. And in this post-AI world where a lot of products are going to be replicated, duplicated, like it's really important to prove that you have a moat, and it doesn't matter what your competition is doing, you can still produce that free cash flow while maintaining the top line growth. That's why Rule 40 is a perfect barometer. Revenue growth, free cash flow margins, 40 plus. You prove you have a moat. And if you keep that for the next 5 years for your CAGR, it's just like compound. That's exactly what happened at Adobe. Adobe changed businesses to a software component of their business. And now there's printing cash, and they have even right now, like AI can disrupt their business. They're still like barely denting as much as you'd assume because they're just printing cash while still having that top line growth. Another example is ServiceNow. enterprise IT management. They're the kings of SaaS. They're reporting this week. This week's a really ServiceNow is a really important like health check on what software is going to be like this earnings cycle, because they're always their first names to report their earnings every cycle. So if they're struggling in software, it's safe to say there's going to be a few that's going to outperform, in my opinion. So they rarely dip because they produce there's terminal free cash flow margins of 30+% while having top line growth of 20+% for years and years and years. So like that proves they have a moat, and people just want to get that kind of risk on appetite for a high quality, top of breed growth software company. And having those two metrics quantifies you as that.
Is Falcon Crowdstrike's moat? And if not, what is the moat?
It is their moat. But it was, again, like they didn't have to spend as much on S&M or like really going like R&D as much, because people just trusted them. Like they had such a respectable like image in the cybersecurity space, even in tech space. Like they're the best. They still are. Like SentinelOne and CrowdStrike should not be comparable at all. The argument could be SentinelOne might catch a bid from new customers not trusting, putting all their trust in CrowdStrike. So maybe some of the business will start trickling down to SentinelOne. I get that argument, but CrowdStrike will not lose customers and they're going to go SentinelOne. Like that will not happen. I really don't think it'll happen. I think Palo Alto might absorb that business for existing customers if that does happen, but there's still only two major players in this space, and it's Palo Alto and CrowdStrike. SentinelOne will catch a bid because it really is undervalued, and they have a high floor in their stock, because you just saw what Wiz got acquired for. You just saw that GitLab's going to potentially get acquired as well. Like there is an appetite in M&A space for small and mid-tech companies who aren't really big enough to compete with the big boys. So they're going to get acquired to get vertically integrated into some suite of products. So SentinelOne has a really high floor, and ever since this Wiz deal occurred, I bought some leaps in SentinelOne because like this is going to catch a bid. And then the CrowdStrike happens, like, oh wow, it's a double edge. Like there's gonna be two catalysts now.
Right, that's another right.
So and also, yeah, go on.
Yeah, real quick, the super chat, Adam, thanks for the $5. He said cyber is only 15% of the business. What else do they do? So I think cloud is 15% of the business. The rest is primarily human identity and endpoint, correct?
Yeah, exactly. Yeah.
Okay, so cloud's
a newer one. That's why. And now it's like,
got it.
Again, I also want to say like this was not a breach. Like doesn't make any of their products like less quality. It's literally just an admin error issue.
Okay, lawsuits. So Delta's probably going to sue them. I would imagine some of these television stations are going to sue them. They're going to find some argument. What do you think the lawsuit system looks like? Do they have to pay that money? Is it tens of billions or hundreds of millions? What do you think ends up being the overall cost?
It's going to be a refund max. There's no value on potential deaths that occurred in an outage or loss of business for like the planes, or like you just said, like any loss of revenue that's not on CrowdStrike. It's whatever you paid. It's part of their contract. They have specifically like, we'll offer you I read it in their contract actually. We'll offer you a refund for whatever you spent. We'll give back, but that's all we're liable for. And that's pretty standard. Like if you think about it, like you think CrowdStrike has like the top of the top lawyers like who implement these little things in the contracts, like they do. So I think it's so overdrawn that they're gonna file for bankruptcy because they have to spend over $15-20 billion in fees. Like fine, that's not gonna happen. And if I had to put my money on it, probably around $500 million fines. It's not gonna be multiple billions. I really think it's gonna be a lot lighter than a lot of people anticipate. Right now, they have $4 billion in free cash flow. They are producing.
Maybe they have $4 billion in on the balance. I think
$4 billion in cash, but they're producing $1.3 billion in free cash flow a year. This year, that's going to incrementally add to up to $3 billion in 3 years. So like, I think this process is going to be prolonged on the legal side. It's not going to be handled this year. It's going to happen probably in a couple years. Final conclusion, like in a year or two. By then, they're going to be producing $2 billion of incremental free cash flow a year.
Okay,
so
but the argument against that, Shay, is they're going to ruin so many relationships that Delta's not going to renew with them. So there's no way they can make up the amount they have to pay in lawsuits.
I don't think they're not going to renew with them. I think they're going to have to offer free credits, like lighten the load of future costs for them. That's going to like, we fucked up. We want to help you out. because it was our stupidity that caused it internally. So here's some free credits. Like, it's natural. Like in this biz, like I can't say which company I was working for at the time, but like we had a pretty big issue with one of our customers. And what do? We offered future credits. And as time went on, 1 or 2 quarters, like they have a short memory stamp. Unless they have a short memory about what happened, because they know they have an amazing product, just awful implementation of quality assurance. And that was your stupidity, but you paid up for it by giving us future credits. So I think they won't lose that many customers, existing customers, because of that credits and refund. Like, end of the day, fine, Delta's pissed off. What, they're going to go leave and have to go spend more money? No, it's all cost effective. Like, they're going to save money if they stay. And they're going to like, we know your product's incredible. You messed up. We're going to save money if we stay. And we're going to see how you do, like, going forward. You better not do this again, like, type of thing. So future businesses is a different story. That's like, okay. They had this reputation of, like, again, top, highest quality. That might have to do some more persuading, and I don't know how that's going to look. But again, everything that they produce, like all those different modules I called out, those are all in-house. They didn't go acquiring it. Palo Alto has a massive issue of organically providing growth. Like, they have to go acquire different companies to vertically integrate into their suite of products. Crowdstrike doesn't do that. They literally in-house just create all these growth modules. So I think going forward, like, they're probably continually going to do that. Who knows what new future growth avenues there will be in cybersecurity. So I'm confident in them long-term. It's going to be a massive headache for, honestly, the rest of this year, probably, at least. I think Palo Alto catches the best bid of safest bid off this. Sentinel-1 is really interesting on the most room it can catch. But CrowdStrike will still be the top solution, in my opinion. It's just they're going through evaluation compression right now.
Where do you think the bottom is on this one? I mean,
I know
people are talking about below 200. I know it's already down 30%, but like, when does the market think it's just too juicy to resist?
So right now, first, it's in a stage 4 breakdown on the chart. So when it sliced through 290, I was like, okay, this could get ugly. There's a couple gap fills, 260, 240, 200. But if you look fundamentally, I think a lot of people are waiting for their earnings report. They want to see, all right, how much did it actually affect their revenue and guide and ARR and growth retention rates? Like, they're waiting for that. So because of that, I don't think we'll go too much. Like, it won't go straight to 200. It rarely happens that clean where it goes from 400 to 200 and that's it. It doesn't happen. There's going to be like ebbs and flows, and earnings seasons in a couple weeks, especially for growth stocks. Yeah. So I think people are waiting for that on a fundamental basis. Right now is a good price to pay. I just said Palo Alto is a 5% premium on evaluation for fundamentals than CrowdStrike. They're both blue chip, in my opinion. Sentinel-1 is 20% discount to both those names, but they well deserved. They're a smaller scale, smaller business, not really the adaptive. They don't have that many different optionalities like Palo Alto and CrowdStrike has. So it deserves that discount, in my opinion. So I think 260 is a very safe play fundamentally. Love it if it recovered at 290 on the charts. But right now, I mean,
you think a couple more bad headlines sends the sucker down easily as the market just dumps it?
I mean, so Snowflake had that hack a month ago. And I think a couple weeks later, we found AT&T, like that massive thing for those 6 months.
Yeah.
It didn't really move off that much on that AT&T headline. Like,
correct. No, that's a good point. AT&T, that was like 2 or 3%. Because it already fell 40%, basically, right?
The move already happened, in my opinion. I think 260 is kind of where it's going to hang out fundamentally, unless there's a pullback in tech. That's a different story. I can't speak on that. But I think right now, if things are like just like stabilizing, like I think this is a very interesting level. I know a lot of people, like I got in at 130. This went up to $400. And I got in 2 years ago, 3 years ago. Like, that's a massive multi-bagger for how quickly that occurred. A lot of people missed the boat on this. A lot of people got scared of cybersecurity. Like, they didn't realize, like, oh, cybersecurity, like, why would I invest outside Microsoft, for example? Like, why not? Then AI just essentially gave it the what COVID did for e-commerce. AI is doing the same thing for cybersecurity. Like, it's just inflection point. And now, like, people are realizing, oh, I want cybersecurity exposure because that's going to be a necessary component of the modern AI tech stack 2.0. And that's the safest component of the modern AI tech stack. So people missed out on CrowdStrike. Now they want to get in. I've had so many people hit me up that, when should I get in? I've been wanting to get in for over a year. Like, this seems like a great buying opportunity. I think that shows like the appetite for these like high quality growth names, like when they go on fire sales, they're extremely rare. Like it's
Well, so
so
that's the thing. The rarity about this is what got me interested on Friday. I am not a cybersecurity expert. I'm learning a lot more about it, which is kind of fun, right? When these things happen, you start going deeper and you expand your knowledge base. But when I saw that decline, cybersecurity or Crowdstrike has always been a premier name, but I never liked the valuation. I think even you, even though you've owned it for years, you didn't like that it was at $400. That was a little bit too much. So when it came down in a bull market, we don't get a lot of these opportunities. And if you think it's a bull market till the end of the year, then it's hard to find the dip. And then it comes down even more today. Do you think the rarity of their decline in a bull market is part of the reason people might start bottom feeding on it?
100% agree with you. You nailed it right there. Because the only time this occurs if there's FUD in there. You will never feel safe starting a position in this high quality growth name when it's down 30% a week in a week. There's some FUD associated with it, and there's gonna be fear of like getting in. Like that's part of the game for these kind of opportunities. It's never gonna be like hand play unless COVID occurs and market goes down 30% in like a couple months. Like it's never gonna be that kind of even then there's FUD. Like who knows what the end is in that dip? Like there's always this fear of uncertainty, and because of that, you have to evaluate like, is this the reward over the risk? Like, can this hit 200? Sure, but what if this is a nothing burger at the end of the day? Like this is just pure FUD. So the reason I think there is a small chance this could be FUD is there's nothing purely tangible yet that we've seen that dictates a 30% cut. This is just people. It's a story stock, almost like people are assuming like, oh, they're going to stop doing this. They're going to pay this. They're going to do this. We haven't seen any facts yet.
Right. And that might come out in the next couple of days or months, but
exactly.
So far, nothing. Right.
But right now, like 30% less than a week with no facts, that's like crazy to me, in my opinion. So like if there was a world where it wasn't as bad as everyone else feared, this will V-shape recovery again above that 290 and probably not deserve that premium one valuation anymore, but it's going to be in line with Palo Alto, in my opinion. And that is going to be at 260, 270. It's going to catch a bid, in my opinion. So I think you have to know what kind of investor you are. If you're an investor who wants 5+ year outlook on these kind of investments, this is an amazing opportunity, in my opinion, because the cybersecurity thematic is in the early innings. It's only going to gain more and more popularity and more volume towards the moves in these names. However, if you're a short-term trader, which I know a lot of people, once it got on the S&P, it was breaking all-time highs. They thought it was going to get to 450, maybe even 500. So they got in, especially in a bull rally. And now they got burnt. So if you're like short-term investor who want to like maybe catch a falling knife or a bounce, I don't know. This is a global IT outage that's never happened in the history of the world. And I don't really know the implications of it financially, fundamentally, but I know long-term, this was nothing product-oriented. It's just human error. And because of that, I know the market's gonna like look past this in a couple of years. And a lot of people forgot about Cloudflare's outage. Like so many people, and that happened 3 years ago. And what happened?
They had an outage. That was the thing.
Yeah, exactly. Yeah, they had an outage where people couldn't go online right now. And that alone, it was during a different time of liquidity was different in the market. But like they didn't realize this $20 billion company had this much an impact in the whole world where you couldn't go online. And when that occurred, I forgot when it was.
Does anyone know the year? Because this is 2021, so I don't trust it because 2021 was.
No, it was pre-2021. I think it went from like 50 to 30 in my opinion. I think that's my memory. It was like way long ago. But people underestimate edge computing in the CDN network in the world. Like, and Cloudflare has no competition, in my opinion, in that specific realm. And I think that validated, like, wow, they are absolutely vital in this world. So half glass full view of this. Again, I told you my OG software people I talked to, like, they had no idea Crowdstrike had this much of a range and reach. Now that they do, it's a $15 billion company that essentially shut down the world. Think about that. Like, that's okay. They
was bullish.
Long term, it could be bullish. Like I'm telling you, you're not going to get rid of your cybersecurity in an organization. Like, it's too much of a headache, and they know the quality's there. It's just like they had a slip up. They had a chef error, per se. Like, nothing wrong with the food. It was chef error. They're going to come back because they know the food is high quality and usually tastes good. They're going to test it again because they've had great experiences before. Like my favorite restaurant, there's been times when the chef just didn't deliver. It was like a weird, it wasn't the taste, it wasn't the same. But I still came back because anecdotally, I had previous experience where like I was really happy with it. So I'm going to give it that chance. Like, you messed up, but like, you're going to fess up dollars for it and credits or what refunds, etc. So you're going to earn my trust back, but I'm going to sleep with one eye open type of thing.
This comment right here, I'm seeing this comment a lot in the chat, global IT outage, but it's a nothing burger. I think, guys, it's a weird mischaracterization of what Shay is saying right here. It's not saying that it's a nothing burger. He's rather saying the market so far doesn't have a fundamental reason based on actual empirical evidence of how to discount the stock. However, it is a big deal. The question is, and this is where either you're a dip buyer or you're a seller, do you believe that once we do get that empirical evidence of XYZ amount of dollars it will cost CrowdStrike, that it'll be worth the risk reward at 260? And I guess we'll see.
Yeah. I mean, I do think, again, like, a lot of their customers probably assume that they had a reliable, error-free update process. That's like literally the basic expectation for any any tech company out there. And they failed to meet that standard. So that's like, wow, huge miss. And also, this does suggest that the incident has exposed, like, I went back, I mentioned a couple times ago, like, there are some absolutely fundamental flaws to the current design of the endpoint architecture where, like, devices and networks are like interacted in a way where remote servers and services are like can be disrupted from the smallest little update.
Right.
And so
insane.
They have to rethink and redesign how endpoint architecture is going to be structured going forward. It's impossible to like not do that after seeing the massive error it had. That's what I meant by nothing burger. Like, essentially it was just a software update, but the implications of it as consumers was drastic. But CTO, CEO, CIO hat on, nothing was wrong with the product. It was just, everyone knows, like, internally, they had issues like this, never at this wide scale, because no product was as valuable as Crowdstrike was apparently on all the Microsoft OS systems. So that's what I meant by nothing burger. But again, like, I have buddies who had to wait 6 hours, like yesterday, and including today. Like, it's still occurring. It's just more of an endpoint issue, in my opinion. And you have to change the architecture. And Crowdstrike is being used as a scapegoat in a way because it was self-inflicted. So that's why, but what, like, they just lost what, $20 billion in market cap in a week or two. That's wild to me from this mistake. And that's, I think it's well deserved, but
maybe it's not. We'll see. Yeah.
That's the thing. And again, like, these opportunities, like, there's risk associated with this. Like, you can't just have like 100% risk-free. Like, that does not how this game's worked.
Yeah, that's the other exciting reason I want to kind of capitalize on this moment, just by like getting a little bit more of an understanding. It's like when the market sells off something, either you look at it as an opportunity and you really go deep to try to figure out, why did Palantir to get to $6? Why did Robinhood get to $7? Or you think, no, they deserve to be at those levels. And maybe they do. Maybe they don't. That's the fun game of investing. We got to go back and forth to figure it out. Speaking of Palantir, I want to transition to that a little bit. So, well, first I got to ask the follow-up question about Snowflake. So you've got Snowflake as a bigger percentage of your portfolio than Palantir. You've been a Snowflake bull for a long time. You started getting deeper into Palantir over the past couple of weeks as you've learned about it even more, even though you've owned it since it was $9. First, give me, what is your current bull case on Snowflake, and why does that still stay as a cornerstone of the portfolio? Then we'll talk about Palantir.
I've been talking with Chad a lot recently. Like, I didn't realize how. I'm meeting with him tomorrow. I have a question about this because I'm wondering if this hurts Palantir a bit right now too. What happens with CrowdStrike? Where I think the platformization or an all-in-one solution, I think that ideology is going out the window now because of this. Right. So now I'm worried that people maybe don't want to rely on everything on one company to provide because of an issue like what occurred recently on CrowdStrike. But for Snowflake, for example, so I got into Palantir under $10, overweight position, and it just flew. While Snowflake didn't as much, and I had more anecdotal evidence of Snowflake across all three different industries. I worked in entertainment, healthcare, and tech. Like, they all use Snowflake, so I experienced it. I didn't experience Palantir. So Snowflake is, I see what happened. Everyone, like 35% of the Fortune 2000 data is on Snowflake right now. And if my thesis that data is going to absolutely explode due to AI, Snowflake should be one of the biggest beneficiaries off that on having some like go-to-market AI products leveraging that data. Frank Sluman, from the people I talked to, apparently he was looking to sell Snowflake past couple years. I didn't realize that. So like, he didn't really care about innovation. He was just like trying to do good enough to potentially get sold. I don't know who to acquire them at that price tag, but people I talk to who like are in that space, that's what he was trying to do. So that's why Snowflake's kind of behind on the AI thematic. But I can make like Palantir has the capability of what Snowflake does, but they don't have the respect in the enterprise space, mainly because CTOs, CIOs, I said it, they're lazy. They don't want to like dig deeper. If they see Palantir's solution, they think of it as voodoo magic, black magic. Like, this is too good to be true. This is some kind of malware. Like, I don't trust you. I'm just gonna go with something safe, reliable, by like Snowflake, who everyone respects in that industry, and it's been around for quite some time. That's what the disconnect between what's happening in Snowflake and Palantir. It's just same thing, like crypto is not becoming mainstream popularity because all the geezers and boomers are in charge of making the law. It's almost like that in CTOs and CIOs right now, where it takes a lot to convince them to even like go to the step 2 of understanding Palantir, where Snowflake, it's simple. Store your data here, we're computed, we're stored, and you have all these different components of you can sell your data via the edge factor in the ecosystem. So I thought anecdotal evidence, I love their fundamentals of 30+% free cash margins, growing the top line. Like at the time, it was like 50%. It was wild. Like they're just growing. Like Palantir never really grew that much because of the government revenue component of their revenue stream. That's slowly changing. Now it's a 50-50 split. So different story. But Snowflake was a hyper growth, 40-50+%, while insane terminal margins. Like that excited me, anecdotal evidence. But you see what happens to a company if they don't innovate to the times. And right now, Snowflake didn't innovate to the times past year or two because Slootman was just looking to be sold. And that was the issue. And he was not a product-oriented CEO. He was very software. Like his presence in Snowflake was the reason why they got so many partnerships in that space, because everyone in software respects Slootman.
Because he was a ServiceNow CEO, right?
Yeah, ServiceNow CEO. And ServiceNow, I just mentioned, that's the GOAT of SaaS. Like that's the first real SaaS company that really made it. So because of that, like Snowflake didn't really have to sell as hard as like Carp does. And now that they're kind of on even keels, and like Carp clearly was playing chess when everyone was playing checkers on AI, and they have that AIP platform that can really change a whole organizational efficiency. I think Snowflake's catching up to Palantir. And I made a post, I think yesterday, I was like, I want to reallocate my growth portfolio a bit in Q3. Like I'm done adding Snowflake, absolutely done until it's proves an AI product is actually working on the top line growth, or it gets to a dumb valuation that's like in $100. I'm done. I'm overweight. Palantir, I got 700 shares under $10. I added 100 shares a couple months ago, but like this thing has not let me add post AIP. Like it's just ran up. And
what do you think right now? So let's transition to Palantir. What do you think about the valuation given the growth? Most people are calling it pretty overvalued given the under 25% growth. And what do you think about the broader moat of Palantir?
So Palantir right now is, you guys are it's trading at 30% premium valuation of Snowflake. Yeah. And I'm using EV to gross profit, revenue gross, and free cash flow margin. So again, Snowflake got re-rated because of the lack of innovation. That proved it. Palantir, however, is kind of now what Crowdstrike was a couple weeks ago. Like everything has to be perfect, because if they miss on the revenue on the top line, which I don't think they will, that's gonna be massive, massive gap down in Palantir stock, because people still don't trust it. I don't understand. Like I get it; it's too good to be true, but people, CTOs, CIOs, just don't trust it as much as they should in the tech world.
Yeah.
So I've been underwriting Palantir growing at 25 to 30% CAGR for 5+ years. If we don't get that this year, there is something I have to revisit my thesis on why that is, because we're seeing the massive commercial clients growing. We're not seeing that trickle to the top line growth. Why is that? Is it because that white canvas part of after you install after the boot camps, you install their program, like that's taking longer than the 6 months, or like it's something's off if they don't really like guide closer to 25% going forward, because they are at that inflection point where big tech has spent billions of dollars on creating these in-house LLMs, but they're going to slowly realize, or they have already, that we're not seeing an ROI from this AI related investments. Like we know we have to have we have to have the compute servers and hardware in our business in order to like take advantage of the AI thematic. But we're realizing like we're not seeing any actionable insight from all this data we're getting from our in-house LLMs, and we're not seeing real ROI. So what now? Are we going to get plateau and CapEx spend from all the big players, or are we going to double down and like, okay, we need Foundry or ontology layer on top of this LLM in order to actually make these billions of dollars we invested worthwhile? I think that's the inflection point we're at Palantir right now, because I have spoken to people in those rooms. They are having that conversation right now. It's been 6 to 9 months after these AI related investments that like they went gun-ho on like spending billions of dollars to get as much GPUs as possible, servers. And now they're realizing, okay, we still have more supply than demand. We have more demand than supply, but it's getting closer and closer to becoming even. We have to ask ourselves, like, what's the next stage of this? Like, we have to figure out what we're going to do with this product that we just spent billions of dollars on. And that's where Palantir, I think, is going to really just like go hard, in my opinion. It's going to be like an Nvidia type move where people thought Nvidia, there's just a gaming chip company a couple years ago. Like, how can it be a $1 trillion company? All it does is provide chips for gaming. AI turned that upside down, and now they're the center of the new digital economy where anything going forward has to essentially go through Nvidia for the next couple of years because their innovation.
One sec, Shay. You kind of froze for me. Either you froze for me or you froze for everybody. I think. Chad, is he frozen for you guys too? It might just be me.
Oh, you good? I think it was me.
Yeah, you're back.
Yeah, so I think Palantir is at that inflection point where it's like they are just going to be not forced, but they're going to be more willing to be open-minded to see what Palantir has to offer, because their necks might be on the line if they don't get an ROI on all this dollars that they spend. And also, I do want to call out, like, I see a lot of Crowdstrike and Palantir comparables. Like, oh, Crowdstrike's weakness is going to be at Palantir's strength because of this massive breach of the experience. It's not comparable.
Why?
It's like saying salad and burger are the same because they both have lettuce. It's completely different. Like, I don't think endpoint is completely, I won't get too in the weeds because I do have to hop off in a little, but endpoint is completely different than the security element that Palantir offers. Like, it's completely different in my opinion. Because it's not fair to compare the two. Same with like Palantir, Snowflake. They have similarities, but they kind of have different parts of the data ecosystem. But I do think Palantir and Snowflake, they shouldn't be paired against each other all the time. Like, there is a sibling rivalry for Palantir and Snowflake. That shouldn't be the case. I get it. Snowflake was a darling IPO child where Palantir has to fight and scrap to kind of get to where they are now, where Snowflake just had to show up because they were that pretty girl at the dance. And now everyone realized they didn't have a good personality, where if you open your eyes, like, Palantir was that nerdy person sitting down, but once they got up and they dolled up, like, wow, they're the gorgeous ones. Like, that's what happened. I get that there's like a weird animosity between them, but there's more than enough room in the new Enterprise 2.0 AI tech stack for both to succeed. And I just want
most of it is just fun. It's us retail investors.
It's fun, but I do think the issue of Palantir is like, you want to be more, have to be respectable because they have such an amazing solution that's so good to be true that you have to like underplay it almost in order for people to be willing to listen. Like, yeah. I talk about Palantir all the time to like my friends, like they think it's just something hyped up like crypto, like specific like altcoin or something. Like, it's just like, sure, like, why doesn't everyone just use it? Like, you're talking Terminator status, like, oh, like, if you install this for $20 million, it will save you $40 million a year. Like, why doesn't everyone just do that? Because they don't trust it. And that's why I'm worried about this hack that we experienced last week, this outage, not hack, an outage. I'm like, oh, is that going to be like some kind, like a narrative on these all-in-one platforms for organizations?
Well, let me ask you. I got 2 more questions left. Let me ask you this one. What are the chances Crowdstrike becomes Snowflake in terms of reputation and then potential stock? High. Why?
Because they have to. Before they were able just to leverage their Falcon platform. Like, historically, just look at us, just accept us. Like, Snowflake kind of had the same thing about data, so people like assumed they would do the same thing for AI, and that was clearly not the case. And now that's the disconnect of like, oh, you did a really great job in data warehousing, but you didn't do anything else. And that was like a PR issue. And like they also had some customer login issues, which is the dumbest thing, again, admin, that caused their hack. So I think they're experiencing the same thing. However, Snowflake and Crowdstrike are nearly identical valuations right now on the fundamental basis, like nearly identical score. So they are already at that point, to answer your question. So they experienced that gap down, that re-rating due to the PR noise. So I think they're there right now.
Okay. Last question. First of all, Shay, thank you for your time. I know a lot of people really appreciate you giving us this clarity on Crowdstrike. Twitter for Shay is in the chat. Tesla's tomorrow. Your third biggest position, I think, is Tesla.
Yeah.
I mean, do we go up? What do you think?
I hate to say this, unless there's something that's just like black swanny on the upside, I see it digesting, going down maybe 2 or 3%. I don't. What can actually be produced tomorrow to justify the move to 270, 275? I don't think anything.
Optimists, FSD updates. I don't. Something.
That's the thing. It's all story stock. This stock,
yeah.
it's a story stock. There's no proof of like actual fundamentals yet, but it's really exciting. I love it. But for an earnings to go up after an earnings report, there has to be clear, tangible reasons why in the numbers.
How do you explain the run from 130 to 270? Like what was that? How did that happen?
So being on the top line on the EV deliveries, that was a massive, like they didn't assume that. Energy storage business, massive quarter after quarter growth. Nobody underwrote that energy side of their business. And that alone could be a separate company and be the best of breed of what they do. So I think now they're realizing with the interest cuts are coming narrative, Tesla will be one of the biggest beneficiaries off that, because again, if automotive industry improves, their essentially deliveries are going to also improve as well. And now they won't have to like cut price. They don't have to like hurt their margin compression due to it. So now like they're re-rating it as like the worst is behind them, automotive industry. So no more price cuts on the product. So we don't have to worry about any kind of margin deterioration. So now that headwind will slowly turn into a tailwind because the appetite for new EVs is still there. So I think that's what's causing it. But I do have to hop off. I'm a couple minutes late my call, but love it.
Thank you, brother. We appreciate it. It was long overdue. He was on the channel, guys. His Twitter will be in the chat in the description, and we'll get you on next time. Thank you so much, man.
Sounds good.
Awesome.
Thanks, man.
See ya. Bye. All right, folks. I think that was good. We got a good understanding of this Crowdstrike issue. I think we got a good bear case and a bull case. Again, his Twitter's in the chat. Bear case was essentially they become like Snowflake. They ruined their reputation, and now it becomes very hard for the sales folks in Crowdstrike, just like it is right now hard for the sales folk in Snowflake to get new customers and be able to get the trust from people that is needed. The bull case is, look, it's taken a pretty bad haircut. And, this is going to be very interesting when it comes to Crowdstrike. Again, my position is 5 shares, so I'm not really feeling the extent of the pain like some of the institutional managers that have this as their top 5 holdings are feeling, down 30%. But it's down 35-ish% over the past couple of days, lost about 25 billion in market cap. Either the pain is baked in and it's going to trade flat until earnings, and then we maybe see an upside move on earnings, guidance on earnings. If that's bad, maybe see another downside move, or this is just beginning and Crowdstrike's about to get a 50 to 60% haircut over the next coming months. And then it gets really attractive at like 175-ish, but does it end up getting to that point? I guess we're going to be able to see how this plays out over the next coming months. There is really no desire to buy the dip that dramatically. I think most people thought the dip would be there on Friday. The continuation of the IT outage makes it even worse. So now the question is, when does that end? And I think when that really ends and then the lawsuits start, you can start assessing the empirical evidence from the damage. But outside of that, it's really a question of, do you think the 30% drawdown is worth it? If not, then maybe there's more, maybe there's a dip opportunity. If there is more pain, then maybe there's going to be a better chance to buy Crowdstrike. Kathy did buy 12 million of it on Friday. Of course, Kathy loves to get in when things fall. So we'll see today at 8 p.m. if she bought any more. But overall, it's going to be very interesting to see how the broader market interprets Crowdstrike. Did anyone buy the dip on Crowdstrike? Did anyone get any at all? I know a lot of people on Twitter. I asked on Twitter today. There is a decent amount of people on Twitter buying this thing, buying calls, leaps. I wouldn't buy calls on it yet. Although the calls look attractive, it's just like, dude, like to really get attractive calls, you got to go a bit out of the money. Let's call it 300, 350. which isn't crazy given it was just there. But now you have so much uncertainty. I wouldn't want to have time as a pressure or theta as a pressure on the underlying. I would rather just have the underlying if I'm bullish on CrowdStrike. So I don't know if leaps are the greatest opportunity here. They are attractive right now, but you got to really be confident that this sucker is going back to 350 easily. And I don't know if that's the case yet. We got some people that bought about one share at 262, bought one share, waiting for 261. Some people bought some shares of Palantir today. Palantir had a small dip to 27.69 and then it recovered. So again, these are the little dips we're getting in Palantir. Really Q2 earnings, dude. That is going to be, and I know I say this every quarter, but that is going to be the most consequential earnings in the history of Palantir, because there has never been an earnings where Palantir has ran this like dramatically at these levels. We've gone to like 25 before earnings, but like 25 is still 25. This is pushing 30, which means the valuation's up there. And now the street is specifically asking to show AI-enabled growth. And maybe this quarter is not the quarter for that, right? Maybe it's more customer growth, but AIP monetization is in the next quarter, which means maybe there's a haircut, or maybe they have the Nvidia quarter in Q2. But it is going to be the most important earnings, because I really do think we either gap down to 24, 25, or we test 31, 32, even if we come back to 26, 27, which is fine. But it's going to be one or the other. I don't know if we stay flat. Staying flat would be kind of tough given the average volatility after earnings for Palantir is 18%. So we will see. We will see what happens. Imagine they come in with a 10-cent EPS. Oh my God, that would be amazing. I think they're projected. Let me pull up the numbers. I think they're projected to do 4 cents of EPS this quarter. Palantir is projected to do 3 cents. 652 million. So they just had their revenue raised, actually. That was 650. The street just raised it to 652. So the street's definitely expecting a decent quarter. And then EPS at 3 cents. They probably come in within 3 cents, maybe 4 cents. And then revenue, if they get to 665, it's going to get fun. That's 25% year over year. But even 650, still 22%. It just might not be exactly as much as the street wants. Did you read CodeStrap comments on Crowd? Yeah, I read CodeStrap's comments on Crowd are similar to a lot of people that are bearish on Crowdstrike. And the kind of core thesis is, hey, this is going to take a lot of lawsuits to be able to resolve and ultimately figure out. He's not wrong about that. That is pretty much everything that this is why when some people in the chat are saying Shay's this delusional bull and get him off, he doesn't know what he's. I'm like, dude, he's telling you how bad this could get. He's also telling you maybe this doesn't get that bad. I mean, I don't know what more of an unbiased perspective you could ask for, but yeah, CodeStrap's perspective is that people are going to cancel their contracts. Shay's argument is, hey, they might have ruined their reputation to the point where they can't renew their contracts, and that could lead to another 20 to 30% haircut. Or it could be a nothing burger and we go higher. I think it's going to be exciting to follow. But if you buy the stock or initiate a position, you have to have both of those bull or bear cases kind of in your mind. In general, I've been looking at a lot of bear cases from today. Here's one reply. Let me show you guys. This is the one bear case I thought was pretty credible from someone who works in IT that I thought was really interesting. So this is a guy named Jason Gu. I'm going to read his tweet right here. He said, I'm an IT director, and let me tell you, the reason we pay for cybersecurity is so that we can pass audits. Having the protection is just a bonus. We literally need the software to check off the box. My fellow IT directors in my network are all talking about a switch. Seriously, the cybersecurity industry as a whole will be bullish, but individual companies will run into an idiosyncratic risk. I think he's right about that. And we are going to have to find out in the coming months if that idiosyncratic risk is going to be established on CrowdStrike. Other companies, like Shay mentioned, like Cloudflare, Zscaler, they've had some of these issues before, so it's not like a breach, which I think is the big thing so far. It's not like a Russia breach or anything. It's just like pushing code, which is a really bad mistake, but that is the mistake. Companies have recovered from that, and they've recovered, within a few months, if not a year, because the market overlooks that. This was pretty bad, and the extent of this damage was very bad, to the point where IT directors, as Jason said, are seriously looking to switch. And if it's that bad, then we'll see in the next coming months how bad it ultimately ends up getting. So Cole says, I hope it hits 116. Is that your average? Dude, if it gets to 150, which, I mean, that would be a 50% haircut from here, basically, 45% haircut. That would be like a 70% drawdown, dude. That would be intense. That would be, but for longs, I mean, if you're looking to get exposure to cybersecurity, that would be exciting. However, if it does become a bit of a snowflake where the reputation is damaged that much, and we'll find out in 2 quarters. That's why I don't think anyone has to be super like pound the table. I got to buy the dip. because you can give it 2 quarters, and in 2 quarters, if they show that everything's back to normal, it's good to go. If not, then we probably will have some downside momentum. Crowd will go down like Tesla earlier this year, maybe. I guess we will see. What else do we have? Okay, so we talked a lot about Crowdstrike. For those that are just joining, we just did a podcast on that. Snowflake right here up a little bit. Palantir 28.46 on the day. MicroStrategy 18 hundo. Bitcoin just fell below 68, but it was at 68.3. Robinhood at 23.38. SoFi as well, 7.54 on the day. So that was up about 1%. Starbucks still took a nosedive today, down 3%. TFC, amazing day for TFC, up 3.23%. So incredible stuff for Truist. Verizon, I still didn't go through the report. I don't know why they fell 6%. I have to read more into that, but they fell. And then Tellurian did get acquired today for $1. So they're up 68% on the day. So yeah, Celsius also, I know people saying that in chat, that's down 2.9%. Again, that's going to come down to sales estimates, and we'll see in the next quarter what their earnings look like. June says, I have positions in most of the major cybersecurity names to spread any risk, but I'm convinced cybersecurity is only growing in the future. Yeah, I agree. And so like the same thing with Snowflake. We know data is growing, but as Shay said, does Snowflake's version of data in terms of how they interact with it, is that going to grow with the broader TAM? Theoretically, it should. That is the argument now for Crowdstrike. We know cybersecurity is growing, but will Crowdstrike's share of the cybersecurity ecosystem grow after this outage? I think it'll take 6 months to really figure out. So I really don't think there's a lot of temptation to go super deep and buy the dip, given some of the headlines we're getting. But I mean, it'll be interesting tomorrow. Like, imagine this thing gaps up to 285 and the narrative. The problem is, let's say it goes to 305 tomorrow. The problem is, we know the headlines are about to come around lawsuits. And if those continuously compound and there's no clarity on how much that monetarily costs, that could just bring it back down. Same thing with Snowflake, right? It went up, and then the AT&T news came out. It went down a little bit, not as much as before because it was baked in, but it still suffered, and it was hard for it to go through. Some people are comparing Crowdstrike to Boeing right now. Again, I think Boeing, with their quality control on windows and doors on airplanes, that's been bad for like 7 years. Crowdstrike, this is the first really bad thing they've had. If they have another thing like this, then it's GG, it's over. If this was just a mishap and they never have something like this happen again, I don't think it necessarily has to be Boeing. What else do we have? What else do we have? AMC did go up a little bit today. Yeah, AMC, I think they did a restructuring deal on their debt. AMC's up 5.39%. I might have the exact specifics wrong, but that's what led AMC to gain a little bit of a pop. It seems like the meme stocks are dying out a little bit. We're getting to that point of the year where people are kind of done with that. GameStop was up 1% today, and then Chewy. We haven't heard from the kitty in almost a month. Chewy's down 2%. So, I mean, he kind of came and disappeared. But maybe he comes back and does something interesting as well. Did I get 5 more shares today? No, not yet. And again, the reason I didn't want to is because I think the headlines could still be bad. And so there's no, again, this is the beauty of DCAing, right? You start a starter position and then you just let it play out and kind of see what happens. You know, it doesn't need to be like you have to get excited to just buy the dip. I think that's also a little bit more of the maturity as an investor, right? No one's going to get the bottom perfectly. Everyone's going to have to DCA in order to be able to do what they need to do. But the point is, if you have an amount of capital you want to allocate, which for me was basically $3,000, don't do it all at once. You know, you don't have to be greedy on it. And if you have to overpay a little bit because it bounces off the dip, then that's fine. But you also don't need to bottom feed that aggressively around it. Arun bought Chewy today. Okay. And you know, their earnings actually might not be horrible. Their earnings might not be bad. It's just now Kitty's in there and he pumped it up. So that's why a lot of people are dismissing it. But the earnings actually might be pretty damn good, given they were profitable last quarter as well. All right. I think that's it. Are there any other headlines that are important? We know the Bitcoin ETFs got some momentum today. Here's the volume on the Bitcoin ETFs. It looks like they got a decent amount of inflows. So volume on IBIT was about 1 billion, Fidelity 300 million, ARK 100 million. So we'll see how many inflows come in today. We don't have the data yet. Last Friday, they got $427 million on July 19th in inflows. We got the conference in a couple days. I'll be streaming the conference. I think that's on Wednesday, if I'm not wrong. Yeah, Wednesday. Tomorrow's Tesla earnings, so that'll be big after hours. Or I think it's on Thursday. Wednesday or Thursday, I'll be streaming it, and we'll see. We'll see what ends up happening with Bitcoin. Anything else? Let's see. Oh wow, TNT is matching Amazon's $1.8 billion NBA media package. Whoa. TNT just said, hey, we're going to keep the NBA. I think they're also going to keep Inside the NBA with Chuck, Ernie, and Shaq and all those guys for a $1.8 billion. I feel like Amazon's just going to offer more, dude. Right? Like, I don't know how TNT has $1.8 billion to spend, but apparently they do. But if Amazon just offers more, maybe it's tough. Ethereum was approved. Yes, we do have Ethereum approved. They should be live tomorrow. We got the official headline just now. Spot ETFs for Ethereum got approved by the SEC. The 424B forms are rolling in. The last step, all systems are a go for tomorrow's 9:30 a.m. launch. That'll be exciting. ETH is not really up after hours based on that. Again, that move was priced in about 2 months ago when this was announced. Ethereum is down actually a little bit, down 1%. Estimates are about 6 billion will come into Ethereum inflows because of the ETF. But we're going to see if it actually ends up happening for ETH. We know for Bitcoin, it did okay. But for ETH, it will be a different story. Dude, I wonder if Amazon actually pays more. I really wonder if Amazon pays more for that. That would be quite interesting if they just say, hey, we're just going to pay a little bit more. Okay, last thing we'll end on. Tom Lee did do a new little interview around Bitcoin and his $150,000 price target. So we'll watch one clip of this and then I'll get you guys out of here for today.
Does the current state of the economy concern you, given that so many people are struggling? I don't know if you've seen some of these viral social videos where young people are comparing Walmart grocery bills from 3 years ago, and they're not up the standard, CPI measure. They're up sometimes 100 or 200%. And then on the other side, you have the S&P at all-time highs, and the people who own assets are richer than ever before. And there's this great divide, and we keep spending as a government and increasing the deficits. Like, how does this play out?
Yeah, I mean, there is a lot of inequality. I think it's really unfair because, as you're pointing out, people who are long assets or their lenders or asset owners are benefiting. Now that does.
And we talked about that with Chris a couple weeks ago, right? He said there's two types of consumers, ones that have assets, ones that don't. If you don't, you're suffering a bit more than those that have equity because equities, real estate, et cetera, has gone up and crypto over the past couple of years.
Does mean, by the way, the best inflation hedge so far has been Bitcoin, right? Because, I mean, if you compare that, you take the Walmart bill and then put the price of Bitcoin, Bitcoin's done a lot better than anything and would have been a good hedge. But, for as long as I've been following markets, I've heard the same argument that 40% of the country is miserable. And if you look at the Federal Reserve's survey of consumer finances and you build what you think is a normal budget for people, roughly 50% of the country, since I've been following markets, lives paycheck to paycheck. They've never, in fact, 40% of American households are net recipients of transfer payments from governments. So they don't actually pay taxes. They get payments, like whether it's food stamps, et cetera, or assistance. So America has always had this divide, unfortunately, where roughly half the country doesn't pay taxes, is a recipient of transfer payments. And I think when people post these things, they're getting a megaphone, which is great. I mean, I'd love to see a way to figure out how to have people suffer less, but it's always been the case, actually.
Do you think that Bitcoin can actually help solve some of these issues because it has been such a driver of economic empowerment?
Absolutely. I mean, I think what the mistake people think is they have to buy a whole Bitcoin and come up with, $63,000. I mean, they can buy a Satoshi, a Satoshi every day, instead of a latte. And more importantly, if Bitcoin network value plays out and Bitcoin, let's take year-end's number, but let's say Bitcoin is 1 million. Okay, so it's a 20 times increase from here. Anyone who's long Bitcoin won't care about inflation, you know, and that's the important thing, because it's really just the dollar getting cheaper. It's not, I mean, that's really what they're experiencing.
Along with what Tom Lee said right there, Elon tweeted something interesting today. So he says, what are we with dollar value destruction, you might ask? And he says the dollar is going to turn into the reserve currency of Zimbabwe. Very interesting. And I said, so does that mean we should buy Bitcoin? And then Michael Saylor responded, Bitcoin over bullets. So I don't know. Elon's in Tennessee. If he shows up at that conference, that would be pretty crazy. I doubt that's happening, but if he does, that'd be interesting of a catalyst for Bitcoin. If Tesla still owns Bitcoin or bought more Bitcoin, that would also be interesting. But maybe we are entering into that sort of Bitcoin run going into the August timeframe, right before rate cuts. That would be beneficial for Bitcoin. All right, cool. That's what we got for today. Elon did do a interview with Jordan Peterson. We're not going to watch it. It's like 2 hours long, but if you want to, it's on Twitter. They talked about a variety of things, so you guys can check that out. And I'll try to get some good clips of that and show it tomorrow morning, especially the stuff that has to do with a little bit more around the markets. All right, that's it for me. Thank you, everybody. Hopefully you enjoy that interview. I'll see you guys tomorrow on the Market Open, 8:45 a.m. Tomorrow, we got Tesla and Google at the same time. I'll have a bunch of people on the show tomorrow on the Market Close. It'll be really interesting to see what happens with Tesla. Always good to hear from Elon. And then Google as well. Big tech earnings. It starts. If Google can crush, hopefully the rest of them can crush. If Tesla has a good narrative and story, then we'll hopefully have a good start to Q2 big tech earnings. All right. That's it for me. Thank you, everybody. Have a good one. I'll see you tomorrow morning. Bye, everyone.